Hello and a warm welcome to the Entrepreneurial Edge. I'm Natasha Jacobs. Now this week we take a close look at the story behind 88 miles per hour, a company that invests in startups. The team behind the company first came to Africa in 2010 when they set up a 48-hour investment bootcamp. Since then they've added 15 startups to their portfolio, all mobile web-based businesses. In studio with me is the founder of 88 miles per hour, Kresten Buch. But before I chat to him, let's find out more about his business.
It's a tough world out there if you're a startup company. 88 miles per hour is a Cape Town and Nairobi-based initiative trying to make the process a little easier.
So 88 MPH is a fund, so we invest in startups, but then of course we also are an accelerator because a lot of the startups that we invest in are extremely early stage, so they need a lot more than just money. If we just gave them money, some of them might survive, most of them probably wouldn't.
The company has invited startups in South Africa to apply for funding and a 3-month intensive incubator program, during which the selected entrepreneurs will use 88 miles per hour as office space and pick the brains of a team of expert mentors gathered by the company.
We've gathered like a host of mentors who are experts in different domains, in different industries, who have a lot of connections, who have local knowledge of the market, as well as international mentors that have expertise within tech, for example.
The startups, which will be selected to participate in this first round of incubation in Cape Town, have one thing in common. They are all operating in the technology and mobile space.
When you invest really early in a startup, you need to know what it is that that startup can do. And because everybody involved in this fund has a background in web mobile technology, then that's something we know. We know what's a good idea, we know what's going to work, and most importantly, we know what's not probably going to work, or we think we know what's not going to work. We want to invest in technologies that solve problems for emerging markets. So I think that there's a lot of things that you can do in Africa because it's such a new market that can be easily scaled to other emerging markets. So for example, M-Pesa in Kenya, I mean, it's amazing what it's done.
The organization is currently in the process of gathering seed funding from potential investors, which it will inject into the startups during the incubator phase of the project, in return for around 7% equity in the respective business.
Okay, well, so our fund, we don't know exactly where we'll end up with, but we are hoping for between $400,000 and $1.2 million. We try to get as many local investors as possible. So the last fund in Nairobi has about 17 investors total in the fund, and 11 of them are local investors. And that's very important because, I mean, local investors, they know more about the local market, and also when they have skin in the game, they want to help out and they want to introduce the startups to their networks. So it just works out very well.
Once the 3-month incubator phase is complete, the startup entrepreneurs have the opportunity to present their product to a wider audience at an event hosted by 88 miles per hour.
And Demo Day is basically a showcasing, so we invite a ton of mentors and investors and people to show and tell kind of event for the startups. And then they get to demo their prototypes, they get to see what kind of investors are in the market, who might want to fund them for follow-on funding. And then basically it's a big party to celebrate that they finished 3 months of intensive hard work.
The organization has already completed one 3-month incubator program for 15 startups in Kenya and is set to host Demo Day this month. The first South African incubator program, led by 88 miles per hour, will start in the first quarter of next year.
In studio with me, I have Kresten Buch, founder of 88 miles per hour. Kresten, welcome.
Thank you.
Now, before we start, I have to ask this question. 88 miles per hour, is it a nod to a famous 80s movie?
Yeah, correct.
Back to the Future.
Back to the Future, yes.
The speed you need to travel at to go back into
Exactly,
in
yeah.
time.
When the car hits 88 miles per hour, that is when it goes back to the future, or yeah, go forward.
Good thinking. Now, you are a seed funding company. There's a lot of terms being bandied about. Seed funding, venture capital, angel investing. Where does 88 sit in this landscape?
Yeah, so we are a seed fund, but also we don't only put in seed capital, but we also run a 3-month accelerator program. So to help the startups in these 3 months after we invested in them. So it's more than money we come with. We also come with like a program where we invite the mentors. We have international experienced people coming to the program, 8 of them, entrepreneurs in residence from Nicaragua, from Germany, from New York, from India, to come and help the startups in these 3 months prove that their idea can turn into a business.
Now, speaking of ideas and businesses, 88 came to Africa in 2010 with your first bootcamp program. What is the lure behind the African continent? Is it the fact that we have over 600 million mobile users?
Yeah, actually, the story actually started with I went to Stanford in 2009, where I met David Ovino, who at the time was the CEO of Kenya Data Networks. And he convinced me to come. He explained to me about the things going on in Kenya with M-Pesa, mobile money, and so basically I went there on a 1-week vacation. And at the time I was interested in investing in early stage tech startups. And I was just like fascinated about what was going on here. So I thought, why not do it here? Because here, the great opportunity here, and it didn't seem at the time like others had done it. So why not be first to market and try out the idea of going in aggressively investing in early stage in Africa.
Now, you are one of the first to market. Why is VC and seed capital and angel investing in such an infancy stage on the continent? Is it still the risks perceived that we have?
I think that especially angel investing, that's the first, or seed and angel investing, very early stage where the startup has not proven that it is a business yet. I think that it's really exists in Silicon Valley. And the people who are the angel investors are normally people who have exited companies in technology. And obviously there is close to 0 of them on the African continent, or also in Europe or in Denmark, where I come from. Angel investors almost do not exist. So first you need a round of successful entrepreneurs, and that is the way you build up, I think, an ecosystem of angel investors. That is key to getting startups up to the VC, real VC investors.
How does the seed funding process actually work?
So we take startups in batches of 8 to 10 at the same time, so we can run them through the program together. So it starts, we have do a lot of advertising to get a lot of applications. In Nairobi we got 400 applications. Here in Cape Town so far we have 200, so I expect to be
in less than a month.
In less than a month, yeah. So we go through, we don't ask startups to do a long business plan, because at that stage of their business I don't think you can build like a proper business plan.
And they don't necessarily have the business skills yet.
No, exactly. So we ask them a series of questions about their business, about what they've done before, whether they have traction, have they launched a product, and so on. And based on that, we do a dialogue with them online, and if we like it, we take Skype calls or meet them, and then we make a decision. But the point is that it's not a long process. We're like quick in making the decision, and we invest small amount of money and in a lot of startups to diversify the risk. So we see actually the program is more of a due diligence almost for the startups. Instead of trying to analyze, we give the startup some money and let them try it out, which we think is much more effective and definitely also much more interesting.
What grabs your attention? Is it the bright idea, or is it the passion for what they're trying to develop?
Yeah, it's both, but I love to work with people who really want to, who wants to change the world, or wants to, give up the nice corporate job and go down in salary and to try to solve a problem. And it's really interesting to work with these people, and having 10 teams together in the same room for 3 months, it creates a lot of energy and passion.
Now, you guys focus on mobile web startups, but any technology-based investment is potentially high risk but high reward. But again, it's in the seed capital phase. What is the risk reward, and what is the current failure rate of the startups you invest in?
It's hard to say now, because it is early stage, and the first real investment we started doing was in 2011 in August. So it's too early to say whether we are successful or not successful. So I think you have to wait a couple of years. But of course we have had companies. One of the first success criteria is that, okay, can we get some of the startups to break even, which we have done in Nairobi, And can we get follow-on funding for some startups, which you also have done with one startup in Nairobi. So, but again, that's not success. Success is when it starts making a lot of money, so you can return some money to the investors, or an exit.
That would be my next question. What is the return on investment? Of course, you're the founder of 88 Miles Per Hour, but you're also an individual investor. How does that return on investment process actually work?
Yeah, so, well, the only way we can make money is obviously if the startup does really well. So either we can make it by it start paying us dividends, or that we are capable of selling that startup. But I mean, as the startup starts with 2-3 people and pre-revenue, it's very hard to sell these kind of companies. Of course, it's normally takes 2, 3, 4 years before a company like that would be sold. So it's too early to tell.
But let's say they do break even, they do become profitable. Those discussions around what the dividends are and how the investors' relationship works, are those things signed and discussed beforehand? And does our market understand those intricacies enough?
It's not agreed beforehand. I mean, there's a normal investment agreement between us and the startups. I mean, we're minority stake investors. We take between 8 to 25% of the startup. So I mean, it's the founders who are in the front seat. Of course, if he gets an opportunity to sell his shares, I mean, we have in our agreement like a tag along saying, okay, we can sell our shares with the founder. But normally, of course, the founders is also interested. If there comes a good offer, he's interesting to sell. But at the end of the day, it is the founder who decides whether to sell his company and not. It's not.
But it's not just about the money, it's about the advice and the management. And you guys have a panel of mentors that assist these startups. How important is that as part of the mentoring and the growing process?
I think it's very important. I think that it's very wrong here in Africa to come down and invest in 3, 4, 19-year-old guys $1 million. I mean, it's bound to go wrong. I mean, it's more important to invest smaller amount. And then go in and help them build their business, help them understand basic business. I mean, there's a lot of talent, great tech guys, but on the business sides, still they lack. Obviously, they don't have experience. So these things is important to do much more important than just dumping money on startups.
Because if the money's gone, it's gone.
Yeah, and if you have a not so good idea and you spend $1 million in advertising, it's still not going to work. So it's better to test the market, prove the business model, and when you're there, then you can go and get the big funding to scale it up. But before that, I don't think it's a good idea to take too much money.
All right, Kresten, we'll continue on that trend after the break.